Thank you for inviting me to this conference, and also thanks to the organizers for doing this conference. This is an important time, integrating climate, but beyond climate, integrating nature into macroeconomic models and finance. I am not a macroeconomist. As you heard, I'm an environmental resource economist. But I will do my best to get to macro. But I'll tell you a little bit about my background. So at the University of Minnesota, I have a joint appointment between ecology and economics. I also work on something called the Natural Capital Project, which has economists, but more it has ecologists and hydrologists and climate people. So it's working on that. It's a lot of translation between economics and the natural sciences. We've had great success in being able to integrate economics and natural sciences in the world of ecosystem services and natural capital. To date, it's been more on the microeconomic side, so I think there's a bit more translation that's needed to get to the macro models, but I will get us part of the way there. But then the next talk, my colleague Justin Johnson will talk about models which are much closer to macro. So you can view me as the warm-up act for Justin's talk. Okay, so being macro, I thought I'd start off big. So I just want to make a basic point, which is that we live in the biosphere, and the biosphere is this thin layer above and below, slightly below the surface of the Earth, where life exists. We depend upon the biosphere. Think about, I don't know if any of you have seen or read the book The Martian, but life is pretty tough outside of the biosphere. There was, it's fair to say the biosphere is our life support system. Some of you may be aware of a paper that was published in the 1990s in Nature that said, basically the biosphere or nature is worth $33 trillion annually, to which economist Mike Thoman said, that's a serious underestimate of infinity. So, but many people, including the opening slides this morning, or the opening kind of monologue this morning, have talked about that we are in a new era. Geologists call this the Anthropocene, and basically what the Anthropocene means is that humans are now the driving force of change within the biosphere. It could be climate change, but it's also land use change, change in nutrient flows, and so forth. So if we're and this actually is a slide that comes from work of Will Steffen and colleagues. They termed this the Great Acceleration. So the impact of human activities in almost any dimension that you want to think about has increased greatly within the last 100 years, really since the end of World War II. So it's not just climate change. It's a whole range of things. We've modified the nitrogen cycle, for example, much more than we've modified the carbon cycle. Put another way, a little bit more poetically, I have a colleague in China who shows this picture. There's an artist in China. So the thing on the left, the picture on the left is actually a famous Chinese painting from the 12th century, showing beautiful nature. The interpretation in the 21st century on the right shows trees transformed into construction cranes, and mountains transformed into high-rises. So back a few years ago, I partook in IPBES, which stands for the Intergovernmental Science Policy Platform on Biodiversity and Ecosystem Services. It's quite a mouthful. Just IPBES from now on. There was a global assessment, and in that global assessment, summarized some useful facts and figures. We have, as I said, we live in the Anthropocene. We have deeply configured, changed the oceans, the atmosphere, and the land. Here are just some statistics. Actually, this was in the opening montage this morning. So 75% of land area is significantly altered. 85% of wetlands over the last 2 centuries have been lost. You can also look at this in terms of species extinction. So here are what's known about what's critically endangered, vulnerable, and so forth. Global extinction rates are far higher than they have been over the last 10 million years, and you can see, and in fact, again, that rate is accelerating as we come closer in time to the present. Well, it's not just about species. So, sometimes when people use the term biodiversity, I think they're talking about, we're worried about polar bears and panda bears and so forth. But this is not just about nature, it's also about humans. And so there's the term ecosystem services, or nature's contributions to people, but work within the IPBES summarizing the status and trends of what's going on with ecosystem services. So this is too small to read, but what I really want you to take from this is if it's orange, it means that the global trend has been downward over time over the last 50 years globally. If it's blue, it has been upward. This chart is dominated by orange. So what nature is contributing to people has been declining, especially on the left-hand side. That's the potential of nature, so the supply that nature can give to us. I think a clearer way, I want to draw one more lesson out of this. So the earlier version of the IPBES global assessment was something called the Millennium Ecosystem Assessment. It was published in 2005. It made it was going to be, again, about ecology, ecosystems, biology, but they made the point, in fact titled it Ecosystems and Human Well-Being, right? That this is important for our own welfare. Again, this is too small probably to read, but maybe you can pick out that there are upward-facing triangles and downward-facing triangles, and those are services which are increasing if they're upward and decreasing if they're downward. There's an interesting pattern in this if you look carefully, which is that there are, first of all, very few upward ones, but the ones that are upwards are almost all private goods, right? So it's crops, it's livestock, it's aquaculture. Almost all the rest of these are public goods, right? So we know with public goods that the difference between what's profitable for a firm or a household for that matter, and what is socially optimal, there's going to be a divergence. And so we would not expect there to be an optimal amount of provision of natural capital or ecosystem services. And in fact, almost all the public goods we have seen drop through time. So one way of sort of summarizing this first part is that we have the previous geologic age was called the Holocene. We all grew up in the Holocene, but we are now in the Anthropocene. But we have sort of a holdover of Holocene institutions for what is now a brave new era. So in this new era, we vitally need to incorporate the values of nature and bring these into economic incentives, bring these into macro models and finance. So I'm going to present just a way of thinking about how I've and colleagues have been integrating ecosystem services, natural capital into an economic framework. What we're really after, we're really interested in thinking about how do we change people's decisions? How do we influence things? So in particular, policy decisions that are made, those are going to affect the incentives made by individuals and firms that take actions that affect ecosystems. Okay, so a lot of environmental science is in fact kind of stuck on that second arrow. Well, what happens, what's the consequence of land use change? How much land did we lose? How much, what was the wetland loss figure that I quoted? And that's fine, but to translate this into economics, we need to go further. So we and a number of other people have been working on what we call ecological production functions. So as a as a function of the structure and condition and functions of ecosystems. What do they provide? What are the set of ecosystem services, or now called also nature's contributions to people? What's being provided? Okay, and again, we could stop here and think about, if we have more farmland and we have less wetland, we will have more crops, but we'll have perhaps degraded water quality, less habitat for certain species. We can think about the biophysical trade-offs. We're part of the way there, right? We didn't stop just at what was happening to ecosystems. We translated this into what is it that's benefiting people. But as economists, okay. Sorry, I actually, I meant to slip there. Okay, so again, one could stop here, but I actually want to pause here for a moment and talk about this first step of ecological production functions. Just mention, again, I mentioned the Natural Capital Project at the beginning. Within that project, we've worked on something called INVEST, which stands for the Integrated Evaluation of Ecosystem Services and Trade-offs. This is available software. You can download it. And it's meant to actually do this ecological production function. So what are the provision of various ecosystem services as a function of what either currently is, or hypothetically, if you made a change to land use or land management or resource use, what would it be predicted to be under those changes? So one of the features of these ecological production functions is that they are very spatially explicit, sometimes very fine detail in terms of location. So one of the models that INVEST does is what's called the sediment retention model. So you can think about various land uses. They are going to cause a certain amount of nutrient or sediment load to flow downhill. So if we have a corn field, there's going to be a lot of nitrogen, potentially sediment and phosphorus. They're going to flow downhill. Now, some of that is going to get taken up by downstream forests or downhill forests, for example. But some also, they may contribute further to this. So they're going to retain some of this. There's also going to be additional export, and then we track this all the way down to the stream. So you can see this is a very spatially explicit process, so our models of it have to be quite spatially explicit as well. Just another simple example, water yield. So how much water gets into a stream or a river? So from this sample pixel, we can look at the upstream pixels. We can also look at the downstream pixels, and then the amount that sample pixel is going to be sending downstream is a function of precipitation minus the amount that either evaporates into the air or goes down into the groundwater, and then you can track the surface flows. Again, it's very spatially explicit. Okay, so let me pick up the story. I wanted to do that kind of focus on ecological production functions for a moment. But as economists, we don't want to just stop at the biophysical. We would like to talk about the benefits and cost, so we can use economic valuation methods, both market and non-market, in order to get the benefits and the cost, and then think about what are the net benefits. So we think about economic efficiency. And of course, there are other considerations that go into this as well. We might be concerned about equity or process and so forth. But you see how this fits together. This is really an economics framework. We're interested in thinking about optimal policies, but optimal policies feed through to ecosystems, what ecosystems provide, which come back to benefits and costs, and ultimately thinking about what those trade-offs in the benefits and costs are. Okay, so I want to just run you through several examples of applying this framework. The first is kind of a standard benefit cost approach. So this is work that we did now back over 10 years ago in the state of Minnesota, where we were looking at alternative land uses. And so we thought about, well, what would the decision be if we ignored the ecosystem service values? And what would the decisions be if we considered the ecosystem service values, and we considered various alternatives. So I'm not going to go into detail about these, but you can see we limited agricultural expansion, or we had agriculture expand into basically all highly productive soils across the state, and so on. Okay, we were interested in the following. So in terms of ecosystem services, this was back now 12 years ago. So this was a fairly limited set at that time of ecosystem services that we really could quantify. So we looked at carbon, we looked at water quality, and particularly phosphorus, which is the primary pollutant within Minnesota. We looked at biodiversity. We did not quantify the value of biodiversity, but we just tracked the impacts. And we looked at returns to landowners. So what would the farmers get, or timber operations? We also had land in urban and suburban development. Okay, so under the scenarios, we're comparing here to what was happening at the beginning of this time period, which was 1992, to the end. So the baseline is if we didn't make any policy changes. The other 5 categories are what happens if we what happens if we change the policy. So here for carbon sequestration, you can see that new agriculture is really bad for that. No agricultural expansion and conservation are good. We tend to sequester more carbon in the soil or above ground. We do similarly for phosphorus exports, for grassland birds. Actually, grassland birds actually like agriculture as opposed to forest. Forest birds, it's the opposite. Anyway, you get the idea. We did this also for values of agriculture, forestry, which are minuscule in Minnesota, and urban development. So just the bottom line is, so you can go through that exercise. You can do the ecological production functions and get quantities of the various services like carbon sequestration, phosphorus exports. You can get to values either by using, for example, a social cost of carbon. We actually had studies in Minnesota valuing water quality, so we used those. We did not for biodiversity, so that was kind of off to the side. But anyway, if you look again at this major question about how did incorporating ecosystem services change what we want to do, well, first of all, if you look at what you want to do with ecosystem services, it looks like the no agricultural expansion is the best. If you ignored ecosystem services, it's agricultural expansion. The diametric opposite is the highest. And in fact, it's the lowest when you consider ecosystem services. So here's a case where the ecosystem services themselves don't dominate the values. I mean, the farm values, for example, or urban development values are higher. But on the margin, the decision is actually definitely changes when you consider ecosystem services in the mix. Okay, I want to consider a second example of the application of this approach of integrating ecosystem services and economics. This is work that we undertook with the World Bank, looking at what we call nature's frontiers. Now, most economists know from Econ 101 about production possibility frontiers. So this is work that actually is to drive what we call efficiency frontiers, including ecosystem services as well as other goods and services like the value of crops and grazing and timber. So the question here really is can we simultaneously achieve biodiversity, climate goals, and sustainable development goals, right? As Professor Aghion said, you can, if you have the pandemic and you shut things down, you can improve on climate, but we don't want to do that. We want to have it all. So how do we do that? Well, we're going to have to improve upon current performance in order to be able to do that. So that's the motivation for this work. So the focus here in this work is on land use. So we're going to consider alternative ways that we can utilize land. So it could be crops, it could be for grazing, forestry, or natural areas. Again, we're going to account for multiple benefits. Here it's income, carbon, and biodiversity. And the point here is accounting for multiple benefits at the same time rather than being siloed. You can improve in multiple dimensions. So just very briefly on the how did we do this. So there's a bunch of input data, mostly biophysical input data, like what is the precipitation, where does the, where's the flow of the water going, what is the habitat, and so forth. We consider the choice variable here is landscape alternatives. How are you using the land? We run this through INVEST and other models in order to get outcomes that we care about, again, on those either income, biodiversity, or carbon. And we also use an optimization approach that says, how do we get to the frontier? How do we, for any given level of, let's say, income and biodiversity, how do we maximize carbon storage? Okay. So we can, by using that optimization, we can actually trace out this efficiency frontier. That's what the blue dots are. We also can use the models to tell us where we are currently. So this is for Paraguay. You can see Paraguay, according to our analysis, is well inside the efficiency frontier. We can trace out how much carbon you could sequester or biodiversity you could increase, or how much you could increase income without reducing those. So what are the Pareto moves in this space? So it's not only tells you sort of how much you could get, but also what are the kinds of moves that you would have to make, what are the land use or land management changes in order to get you to the frontier. Okay, so we did this actually for 146 countries around the world. It was a massive data collection operation. I was working with a large team of people who specialize in biodiversity, people who's, we had also water people, even though that's not in here, carbon, and so forth. So if you, this is just 4 sample countries out of the 146, but I picked them to kind of illustrate a point, each one. So up on the far left is Haiti. Haiti is extremely far from the frontier. A lot of land is degraded, so they do not do very well both in the economics as well as the environment space. So Haiti originally had lots of forest. If you could restore forest land, you could do far better in the environment. You could restore some of the forest land as well as then improve the agricultural lands, and you could do better on both. Okay. Some countries it's not possible, so Iceland, basically Iceland, if you've ever been there, I mean, you can either graze or you can not graze. So the question is, how much grazing do you want to do? And that just moves you along that frontier. There are other countries like many in Latin America or sub-Saharan Africa that are lightly populated, have a lot of their original forest cover. They do very well in terms of carbon and biodiversity, not so well in terms of their maximum that they could do in terms of agriculture or grazing or timber values. Opposite a highly developed country like Japan, you see is in the lower right. You can also then sum up across the countries, so the question on this Pareto move, if you move straight up, and this is just for carbon, how many more tons of carbon could you sequester in terrestrial ecosystems without adverse effects on the economy? So we calculated of 233 billion metric tons. It's a lot, but it's not, it's not the energy sector. I mean, I think this was 4 years or so of global emissions, so it's something, but it's not a permanent fix. Or you could move to the right and increase agricultural and timber and grazing values by 300 or 400 billion without loss of biodiversity and greenhouse gas sequestration. I'm going to skip this in time. I will mention this one. So again, going back to Paraguay, you can also ask the question, well, how do you get from here to there? How do you go from the current landscape, which is inefficient, to a more efficient one? And so we looked at the paths that one would get. The good news on this is there are a few very important changes that you can make. So here it just says, like, if you take 30% of the changes, these 3 transition steps, you get almost 2/3 of the benefits. Okay, I want to switch gears a little bit and talk about one other application. This is work that we have done with colleagues from the Chinese Academy of Sciences. A lot of work in this area in China. It's called Gross Ecosystem Product, or GEP, right? We all know about GDP, but what about GEP? So why is China doing this? So it's trying to develop a new measure of like what is nature contributing. They want to be able to use this in parallel with GDP. So it's not replacing GDP, it's a new metric. And so the idea here is that that government officials, for example, would be evaluated both on how did GDP do as well as how GEP did. So what GEP aims to do is to reveal the contributions of nature or ecosystems to the economy, show how those show the connections in these ecosystem services among regions, provide the basis for payments for ecosystem services, and as I said before, serve as a performance metric for government officials. So it reported alongside of GDP. Okay, so GEP, what it is it is the how much, what is the monetary value of the flow of ecosystem services. So it's what is nature contributing to the economy. And this is just a simple chart. There is obviously overlap between GEP and GDP. I mean, think about agriculture. Some of it is contributed by nature, but some of it is contributed by human labor, farm machinery, and so forth. And so there's overlap, but there also are some things that are left out of GDP altogether that are important. So things which, people's aesthetic appreciation of the environment, or flood protection. Well, some of that comes into GDP because it would be reducing built capital. But as you can see, there is overlap, but there's also, this is different information and presented in a different way. It's really what is nature contributing both to marketed and non-marketed goods and services. I'll skip this, but Jim Stock made the point earlier today of, well, all right, I guess I'm going to say it after all. So these are not welfare measures, and so GEP suffers from the same problems that GDP suffers from. So in particular, I've had to explain this to very puzzled ecologists and said, you can, if you have inelastic demand, have a fall in the supply of an ecosystem service and the value of that service increase. Now, of course, we all know what that is as an economist, but again, the point here is this is not a measure of surplus or of welfare. It's a box, right? It's price times quantity. Okay, the other thing that's important to mention on this is it's not a measure of sustainability, right? We really want to talk about wealth measures. So, if we coupled this with a measure of the value of natural capital and said that the value of all capital stocks, including natural capital, would be non-decreasing, as Arrow and others have said, that's a good measure of sustainability. This is a flow measure, an income measure, so it itself is not a sustainability measure. Okay, so how do we go about measuring GEP? Well, there's 4 steps, and many of it parallels what I've talked about for some of the earlier examples. So the first is actually here to track the stock of natural capital. So natural capital is what produces the flow of ecosystem services. We need to use the ecological production functions to go from the conditions of ecosystems to the flow of ecosystem goods and services. We need to be able to price them, right? So this is the valuation step. And then finally aggregate this up into GEP. So you see, the steps that I talked about before. Step 2 is the ecological production function. Step 3 is the valuation step. And then we're putting this into a different format to get it into GEP as opposed to putting it into benefit cost analysis like I did in the first example. Okay, so in China, we had a huge advantage. So every 5 years, China does a China ecosystem assessment. So we used the China ecosystem assessment in the year 2000, and the year 2015 as the basis for our analysis. We use the INVEST models in order to translate this into ecosystem services. We'd actually published an earlier paper on this work, on sort of where were ecosystem services produced in China. We then combine this with valuation. So in environmental economics, a lot of work has been done on pricing non-marketed ecosystem services. I'm not going to go into detail here other than to say, you know, like within environmental economics, people will talk about, oh, we want to do hedonic property price approach, or we want to do travel costs for recreation. In this world, in ecosystem services, there is a lot of what it's called imputed values, so like pollinators. The way you can figure out the value of pollinators is to do the ecology and figure out how pollinators contribute to increased quantity or quality of crops, and then you use market prices to tell you, well, what is that worth? So actually the hard part there is not on the economic side, but on the ecology side. There are other things, however, that are much harder on the economic side, so thinking about what are called non-material services. We used to call them cultural services, so it's things like experience or aesthetics of looking at nature, or tourism, or spiritual values. Okay, and then the last step is aggregating this into GEP. Okay, so you want to avoid double counting, but you also want complete coverage of at least the important ecosystem goods and services. Okay, so just tell you quickly about an application. This is in Qinghai province, which is in western China, high up on the Tibetan Plateau. It's known as the Water Tower of Asia because it's the headwaters of the Mekong River, the Yangtze River, and the Yellow River. Again, too small to read, but what each of these rows is this is an ecosystem service grouped either by, is it a provisioning service? Is it producing something like crops or grazing? Is it a regulatory service? Is it modulating, like, is it filtering out air and water pollution? Is it a new one that I learned in China? Does it prevent dust storms? That's important. Or is it a non-material service like tourism? And that is, in fact, the only non-material service that we have. It's not the only non-material service, but it's the only one that we could actually reasonably measure. So we added that up. We got values for it. The values for that are not so important, but again, you can spatially look at where are these services being produced or provided, and then the ones on the right, the maps are by province. Where are these services being? Where are they generating benefits? So is it downriver, as in water-related ecosystem services, downwind, as in preventing dust storms? Or for recreation, where are the people coming from to Qinghai? So let me just sum up. I want to leave you with a couple of concluding thoughts. So first is that economic activity is causing rapid changes in the biosphere. Right? We are changing the surface of the Earth. We're changing the atmosphere. We're changing the oceans. There is a research policy agenda for which economics, I think, plays an incredibly central role. And I hope that we can make progress on more accurate accounting of the provision of ecosystem services and their values. This is work that's done in concert with natural scientists in order to get to the provision. But the value part of this is something that economists contribute almost all on their own. But then the second step, which I'm not going to talk, I haven't talked much about or won't in this talk, but how do we link this to the policy mechanisms to provide economic incentives to maintain the natural capital and the flow of ecosystem services? There is a lot of work that has been done on that. We've talked, I think the comparison to climate change is good here. Of course, we have done a lot of work on accounting of carbon stocks and flows. We've already mentioned social cost of carbon. People have talked about carbon taxes, carbon cap and trade, innovation policy, and so forth. So there's no shortage here of things to do, and in fact, here's just sort of, living in the U.S., we sometimes get jaded and think we can't do any carbon policy, but there are a number of applications around the world. Now, ecosystem services are slightly different than carbon. First, there are many ecosystem services as opposed to one carbon budget. And secondly, that I envy the people on carbon. There is a global carbon budget. Ecosystem services, location, location, location. So the analysis actually has to be spatially explicit. So in that sense, ecosystem services and bringing ecosystem services into a macro model is necessarily going to be somewhat messier. But despite the difficulties, as I hope those examples show, we know more than enough to get started with this. And I think it's vitally important, given the rate at which we are changing the Earth, that we get on with this. So I'm going to end with a final thought. This is if you travel in China and you work in the environment area, everywhere, every talk starts with the following quote from Xi Jinping: "Lucid water and lush mountains are invaluable assets." Sometimes called green and gold, or green is gold. But drawing the parallel back to economics and actually back to when did GDP arise? So in the Great Depression in the 1930s, there was the realization that we didn't know what was going on in the economy. We needed better statistics. We needed to have better information in order to help guide economic policy. Well, I think now, one could say we're undergoing the great degradation of natural capital, and we urgently need, just as we needed GDP back then, we need GEP or its equivalents in order to help know what's happening with ecosystem services and natural capital to help guide sustainable development. So with that, I thank you very much for your attention.
Thank you, Professor Polasky, for a very interesting presentation. So we won't have a discussant, so we will switch directly to the questions from the public. So if you want to ask a question, please raise your hand. Yes.
I have a commentary because so when I think about the topics you mentioned, of course, the one challenge compared to carbon, and you mentioned, is that ecosystem services have a much more localized impact. And therefore, in terms of policy, perhaps there is less space for international coordination, which could be, which could make things easier or not, depending on the context. I'm wondering if there are examples of localized approaches, and I'm sure there are. So maybe you could mention some example of localized approaches which still, take into account these dynamics at a national scale. So of course there must be, I guess, some integration between regional administrations and national administration. And I suppose China could be an example, even though China is quite dramatically degrading its environment in certain regions. So, but yeah, I'll leave it to that.
Yes. Can we take a couple more? Yeah, Gonzalo.
Hi, Professor Polasky. Gonzalo Garcia Trujillo from the Central Bank of Chile. So thank you very much for an amazing presentation. I enjoyed it a lot. And I was thinking about, because this is a huge framework, right? It's a really complicated framework because we are linking an economic model with ecosystem services models, not just one model, it's a suite of models, right? One model for each ecosystem service that we want to incorporate. So usually what we do, or at least this is my understanding, and please correct me if I'm wrong, but the usual exercise is that you take a baseline for instance, in terms of, I don't know, economic performance, you assess, and for instance, if you want to assess the impact of a policy, you are going to try to evaluate or the land use change, and that is going to be the input for the ecosystem services models, and then you are going to get changes in the provision of those ecosystem services, right? And that's great because we know what we are losing in terms of ecosystem services, but also we can get like a second round in terms of the iteration and see how the economy is going to be affected because you are losing some part of those ecosystem services. But at the end of the day, there is another interesting question that is, okay, so if we continue growing at the pace that we are doing it today, and we continue degrading the natural capital and the ecosystem services themselves, at some point the economic activities are not going to have enough ecosystem services to continue growing or at least producing as much as today. So the question is, what is the baseline at the end of the day in terms of country level? So how can, if we think that we are degrading the nature or the natural capital at a very accelerated pace, what this kind of framework can tell us about what is going to happen in 2100?
Does it work? Yes. Max Alfheimer, thank you for a fascinating talk. I really enjoyed it. I think my question is somewhat similar, but like in poker, sometimes you have to double down. So this looks unbelievably complicated compared to what we're trying to do with sort of global climate impacts. Yet I want to figure out whether we can make it even harder. Okay, let's bring it on, right? So even though Jim Stock has declared victory for the social cost of carbon already, I'm going to disagree with Jim here. And one of the big left out things is what happens to ecosystem services under various scenarios of climate change. So I know you're doing sort of an overall estimate, but for the different scenarios that we have, is there any hope to adopt these models in that context? And third, in a way that is compatible with these new systems that people have developed in a sort of open source kind of framework. So is this something that lives in your shop and I have to call Steve and Justin to do this? Or is this something where somebody who writes in Julia or something like this could actually go and build modules to do more work here?
You want to answer? There's Elias.
So I think my question is also related to the previous two. So we're gonna triple down on this topic. So we've been talking about the climate transition for a while this morning, and tomorrow we will continue on that. And despite the many difficulties, I mean, it's not hard to imagine that if we undertook the right policies, we shouldn't necessarily face a trade-off between long-term growth and stabilizing climate, because it's essentially changing the energy matrix of the world. That's what it is. And that is totally feasible given the technologies we have, if we deploy them correctly, and so on. I mean, it has its costs, but on the long run, it shouldn't affect long-run growth that much. Now, when you go and start analyzing other dimensions of nature, like you did in this presentation, that question becomes a lot trickier. And in my opinion, this is the most important question we have in economics. Certainly, the most important one that we do not devote resources to answer, which is how much can we continue growing given that we have all these multiple dimensions of nature that interact and sort of amplify each other. at least degradation in one dimension amplifies the degradation in other dimensions. So let me narrow down to a very simple question. At our current level of growth, we are expected to double current GDP in about 25 years. In terms of like orders of magnitude, do you think that is feasible, given the violations of the planetary boundaries that we observe already with the current level of GDP? So I see some plots in your presentation that suggest maybe it is, because we are sort of inside the frontier of the efficiency, right? But then going to Gonzalo's question, I mean, there's got to be a limit, right? You mentioned Iceland. Like Iceland, there's no room for optimization. They're kind of there already. So what is the point where the world reaches, you know, when will that point be reached? I mean, I find it appalling that as economists, we not only have not answered that question, we don't have models, or maybe this is the type of models to answer that question, but it's just like a starting. So I would like to know your views on that. I mean, are we going to hit the Malthus limit at some point, or is this something that we, like you said, we can have it all, and there's no limit, conditional that we do things the right way? Thank you.
Okay, I can't remember anymore, so let's do this. Okay, so I'm going to take them in order. So the first question was about, correct me if I'm not right, but you know, with climate, it's global, and with many ecosystem services, it's much more local. I actually think that makes policy easier. You don't have to have climate clubs or international coordination. You know, if you're polluting your own river, typically you're suffering the consequences. Now, obviously, long rivers like the Nile or the Mekong, you still have international coordination conditions there, but I think it does make it easier. And in fact, there are good examples of the kinds of nature policies in countries. So I'll mention 3 countries. So in China, they have perhaps the largest, which is either called the Grain for Green program or the Sloping Land Conversion program, and they also have others, forestry programs and so forth, which are payments for ecosystem services. So, you know, I think you also said, which is partly right, which is that China has degraded their environment, and that's part of the reason why they're moving on this now. But they have instituted, since some disastrous floods in 1997, 1998 on the Yangtze, they instituted these very large payments for ecosystem services programs. So actually, in the period that we looked at across much of China, many ecosystem services are actually improving. So, and if you've been to Beijing or any other Chinese city, you'll know that air quality is improving. So they have reached that point where it's no longer about strictly maximizing economic growth. It's we need to take care of the environment as well. So they have instituted a number of policies at the national level. Now, your other point there, I think, was that local conditions really matter for these things. So like if you have a blanket policy like we do in the US or China does, frankly, you know, we're going to pay a certain amount, like by county, let's say. You know, you really care about some land which is highly erodible, close to streams, maybe has habitat for an endangered species. You don't care so much about others. And so, you know, a really tough practical problem is how do you target these policies which tend to be blanket to where you really need, where they're really generating a lot of benefits. But China has policies, the US has a conservation reserve program and other policies that pay landowners for providing ecosystem services. Perhaps the best known or the earliest was Costa Rica, which had, I won't butcher the Spanish, but basically a payments for ecosystem services program that had a surcharge on fossil fuel use and then would pay landowners to, you know, grow trees or do other things that would increase ecosystem services. So, yeah. Okay. Okay. So I wasn't successful in part of my talk. With, you said, "Oh, this looks so complicated," and Max doubled down on it, and then Elias tripled down on it. But I think the thing to think about here is, yes, there are a lot of details, but the overall framework of this is really not that hard or different than climate. It's the ecological production function. We do something to the environment. How does that change the provision of various services? Now, here there are a lot more services than just carbon, but the principle is the same. So, Max, I'm going to answer part of your question now, which is that's part of the reason for developing this Invest software. So it's not just you have to call up Justin or I in order to do this, that we're making this freely available with good technical support so that when something doesn't work on your machine, you can get some help. So, to use these well, you do have to know, it's helpful to actually know something about where you're working, what the ecology or the ecological production function is telling you, so you can kind of see, does this make sense? But again, it's really the ecological production function, and then it's the valuation. Why is this important to people? How do we value it? And that part, of course, is bread and butter for at least environmental economists, but I think for most economists. It is hard in many of the non-market. I mean, we have put a lot of time into the ecological production function side of things. We've put, as the Natural Capital Project, less time into the valuation part of this. So I think greater improvement can be done there. But in principle, we know how to do this. You also asked a very good question about baselines and thinking about going through time. As with any dynamic model, things are going to evolve through time. One wouldn't just obviously take a static baseline, but I think about taking baseline trajectories. So you think about a baseline trajectory without the policy, put a baseline, put a trajectory with the policy. I mean, Professor Aguillon kind of showed, hey, here's how this evolves through time, with and without. It would be a similar type of exercise here with ecosystem services. Okay, and then there was another part of your question which I think I'll get to with. Well, let's see, Max. I think I've addressed your question, but come back to me if I haven't. The last question, of course, is always the hardest, which is so what is the carrying capacity of the Earth? Like, how big can we grow? If I interpret that question, I don't think we can. I certainly can't answer that. I mean, one part of this, I think, that I'm very leery about is, as was mentioned, your talk earlier with tipping points. Where are those tipping points? I mean, in principle, we can talk about there being feedbacks and systems undergoing collapse, and we see that in shallow lakes, and we see that with fish populations. For really large and important systems, where are they? So Tim Lenton has talked about feedbacks in the climate system. I don't know where those are. I do know we have done some work on a project that we called Make It Fit, which is like how much could people want to have a high standard of living. Can you in fact double? Can you get to 2050 where everybody's standard of living is higher? The work that we did in that project, we found that, in fact, by being smarter, by shifting, like, for example, to renewable energy, you can have more energy without more carbon. Land use is actually on the easier side. There's a lot of things where we can improve the productivity of land and therefore get more food without expanding the land base. So there are things that can be done. Improving water quality is frankly really hard because improving food production without expanding means you're putting more fertilizers on land, particularly in sub-Saharan Africa, and that's going to lessen water quality. So there are trade-offs, but could you make it fit at least into the immediate future? I think the answer is yes, with the caveat of there are surprises. There may be these really unpleasant thresholds. And that's what I worry about, and that's not adequately captured in the models.